Hi, this is Zach here with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe for Sunday, the 2nd of July. Starting off with the FTSE 100, where we nudged the 200-day moving average, 75.42 on Friday, closed just below it, which is obviously slightly unfortunate, but looking for an end-of-day close early in the new week to take us back up towards that April resistance line around 76.20, and hopefully that'll happen over the next week or so. On the downside, the support looking to be around 73.80, 73.85 at that March support line projection. That's the worst we're looking at the moment. Ideally, we get a quick break of the RSI 50 level. It's around 45 at the moment, after the bullish divergence that we've had just at the end of June, where we had a bear trap below the initial June support around 74.45. And that's why above that we're looking for 76.20, etc. on the upside. On to the DAX, which has been in a better place than the FTSE for quite some time. Nice solid close to the week, yet on Friday rather, above the 50-day moving average, and obviously the 200-day moving average also rising. We had an island reversal as well, and bounced off the floor of the rising trend channel from back at the beginning of October. So everything really positive happening at the end of the last week for the DAX. Just looking for a clearance of that 16,300, 16,400 area to take the DAX up to as high as 17,300 as soon as the end of this month. RSI now at 56, which is right in the box seat in terms of continuation on a particular positive trend or recovery. Moving on to the Dow, where the name of the game has been the hope that this market would close above 34,000 and stay above it. We've had a couple of false starts on that, but actually Friday we had a unfilled gap to the upside and closed well above 34,000. I think Apple hitting the 3 trillion level on the market cap was a nice psychological boost. You can see that April 2022 resistance line has been a block on progress, but above it at 34,000, looking for 35,000 initially, hopefully by the end of this month, and then maybe going into August or later, then up to as high as 37,000 plus, which is the top of a rising trend channel from the end of last summer. On the downside, not expecting anything worse now than the 50-day moving average at 33,600, RSI at 62, so still plenty of gas in the tank, up to 70, and the oversold level for this market. On to Bitcoin, which has carried the hopes and dreams of the crypto fans over the recent past. Still in that consolidation, that what looks like a mid-move consolidation ahead of a move up towards 35,000, which is a June 2022 resistance line projection. In fact, that's now up to around 35,400, and we're hoping for that to happen sometime before the end of this month. End of day close above 31,000 is what we're looking for, and in terms of support, not expecting anything worse than the 50-day line, currently at 27,400. On to the small cap stocks, well, mostly small cap stocks, and looks like the charting is working at the moment, especially in the case of Cloudbreak, where we broke a resistance line there from January and the 50-day moving average on Wednesday, Thursday, and then the shares delivered the goods, nearly bagging within the day, and closing right above the 200-day moving average around 0.97. Above that, obviously looking for a retest of that second target that we had there towards 1.2 pence. End of day close above 1.2. If we get it, could take us up to as high as 1.8 by the end of next month. But I suppose we're looking for another attempt at hitting that late February resistance line projection, which was our second target. The first target, obviously, and the second targets there both hit on the same day, which is quite unusual. And in terms of sort of supporting the area to support this market, March resistance around 0.9, probably the place now. So above that, looking for 1.2. Below that, then there may be the need for more consolidation. On to Delarue, which I think I looked at during the week as well. Here you can see that we've basically managed to hit our initial target there at 48 pence, and in fact above 48 pence we were then looking for as high as 66 pence, and hopefully that can happen by the end of this month. The reason for the relative optimism is that we've managed a bear trap from below the April support at 33 pence, and we've now got a rising 50-day moving average on the daily chart. There is the top of the gap there to hit at 49 pence, but clearly above that we're looking for 66 pence over the near term. This stage only well below the 50-day moving average at 39 pence, really delaying the upside scenario. Onto a stock which has been slow and steady and also positive in the recent past, Invinity. Here the shares managed to hit our initial target there at 49 pence. Above 49 pence we're looking for 64 pence, which is a December resistance line projection, and we are expecting the that target at 64 pence to be hit while we remain above recent resistance, or recent broken resistance, at 44 pence. On to a stock which looks encouraging at the moment, and you'll see why with this U-shaped turnaround. Good end of day closes Wednesday, Thursday, Friday above the 200-day moving average at 22 pence, and that means we're looking for a December resistance line projection as high as 34 pence to be hit by the end of this month, in fact. Unfilled gap to the upside and support always above that unfilled gap top at 13 has set the scene for the latest move, and it's good to see that strength above the 200-day line. Only back below the 50-day moving average around 19 pence, even questioning the upside scenario. Moving on to another bigger stock where I think people have had a bit of jiggery pokery surrounding potential bid moves. The shares have tried to shake out the bulls twice now. First was with that bull trap through the 50-day moving average, and then we had a gap down and then a gap up towards the recent peak, 631 pence. Now what's interesting is after a bear trap below £5 on Wednesday, the shares have bounced back like a cork in water to close above the 200-day moving average at 557. Above that, we're looking for not only a retest of 631, but up to £7 by the end of this month. So that's obviously the technical scenario, but it does look as though there is something going on there on a fundamental basis. You don't normally get stocks so keen to get rid of the weak hands there unless there is something going on. And obviously we had the bear trap there back at the beginning of the month below March support around £4. Typically before a bid, there is a bear trap low 4 to 6 weeks prior to the announcement to get rid of people who are accidentally in the stock or don't know whether they should stay in or not. On to Premier African, and here you can see that we've had quite an experience over the last few days. What's interesting here is that we were looking for the shares to perhaps get into the low 40s. They've done a little bit better than that. The bottom of the gap there at 0.49, so that looks as though that's an obvious place for the shares to go, even if they fail from there. End of day close above 0.9, the 49 rather, and we're looking at a potential move up to the 200-day moving average at 0.62, although I have to say that does seem to be quite ambitious at this stage, probably at this stage just looking for around 0.49, 0.5, and waiting for a further signal there. Bullish divergence was the reason that we were looking for a rebound from the low 30s, so that's happened, and with the RSI still only at 38, there is a bit of gas in the tank to get up to that potential 200-day line, testing it as new resistance. Onto a stock which seems to be almost unstoppable at the moment. Here we've got a situation where even though the company ran out of headroom, it managed to raise a bit more money. Golden Cross to end the week between the rising 50 and 200-day moving averages. We found support at our old target at 11 pence, which is also very pleasing, and we're looking for now 15 pence as a target, but obviously it could happen quite early over the course of this week. Unfilled gap to the upside, bear trap gap reversal was the start of the rally here, and the shares have really delivered the goods. Very, very impressive indeed, especially given the fundraising that the company's done. Next target here looks like a minimum 18 pence, which is a July 2022 resistance line projection, and probably one would be looking for much more, but amazing chart over the recent past. On to Panthera. We've also had a decent build for the shares here. There's been, I suppose, good consolidation over the last week or so. We managed to close above the old June resistance at 8.1 pence above that. Looking for a fresh leg to the upside, as high as 12 pence by the end of this month. And upside valid certainly while we're above the recent swing low around 7 pence. Above 7, looking for 12 on Panthera. On to Renalytix, where thankfully the market did respond to the FDA green light. Sometimes these things don't happen, but we had a handbrake turn there. The shares were falling quite rapidly, and then there was a gap higher through the 50 and 200-day lines on Friday. Great close as well, closing above an old gap there, top of the gap there at £1.10. By 110, we're really looking for the shares to head back towards the £1.50 area by the end of this month. And if you're looking for a slightly wider stop loss, probably 98 or 99 pence in April resistance. The key there. Onto a stock where we've finally had a recovery. It looks like some momentum is gathering with S4 Capital, and obviously the wise old sage, Sir Martin Sorrell. Here we've broken a line of resistance from back in March around the 116 there, but looking for a minimum £1.40 there, with the top of the May triangle and bullish divergence backing the recent move. You can see the last few candles there, very strong. That hammer candle on the 26th of June, particularly impressive at the start of last week, and the week ended with a key reversal to the upside, so pretty strong candles there. £1.40 initially by the end of this month, and perhaps over the next 1 to 2 months as high as the 200-day line at £1.72, only back below Friday's low on an end-of-day close basis at £1.14.8 pence, really delaying the upside scenario. On to the last three, and starting off with San Leon, which looks like it's finally recovering after that horrible gap down that we had through support last month. Here we've caught a line of support there from July last year. That's around 13 pence above that. We're looking for the shares to fill the gap up towards 21 pence. And if you're cautious, you'll probably wait for the shares to break the old March support around 18 pence ahead of a potential move back to the low 20s. On to a stock which has been featured in the Daily Mail, the Midas column, which is quite an event, one would say, Thor Explorations. Here we've still got this rising trend channel from the early part of last year. The same message here on a technical basis above 16 pence. Looking for 23 pence, hopefully over the next 1 to 2 months, and maybe the mention in the papers gives this stock some decent momentum. Finishing off with United Oil and Gas, where it could be 50th time lucky, I think, in terms of recovering. We've got a rising trend channel here from November. For the channel around 1.4 pence. Above that, we're looking for as high as 2.25 pence. And ideally, we stay above now the 200-day line at 1.5 pence. Nice RSI bounce off neutral 50, also adding to the potential momentum there. That's it for me today. More updates during the week.